Okay, today I'm here with Steve Saretsky. Steve Saretsky is a realtor in Vancouver. Steve, thanks for joining me.
Yeah, thanks for having me on.
So, Steve, kind of wanted to get your perspective. You're more of a stats guy, macroeconomics, global. Obviously, there's a lot of things going on. We're in a situation right now that nobody's got a blueprint for, but I wanted to get your perspective, what you're seeing. Just kind of what's going on out there.
Yeah, so obviously, market activities kind of ground to a halt. I mean, there's still stuff happening, but so you look over the last couple of weeks, like sales have dropped on average 50% each week. So they're down about 50%, and new listings are down about 60%. So not a whole lot of activity. There's still a few things selling here and there, but for the most part, things have really died off. Prices, they haven't really changed a whole lot. I mean, I would say maybe there's a little bit of discounting happening, a couple percent. Stuff that maybe would have gone multiple offers, 3 or 4 weeks ago is now selling slightly below the list price. That seems to be kind of what's happening. And obviously, we'll probably get a better idea of where the market is going or where it's going to be once the market starts to resume and you get listings back onto the market and we sort of start to see where sales shape out.
I mean, obviously, right now, with people being able to defer their payments, it's not a huge, actually, it's not painful at all, really. It's, they can add it to the back of the mortgage. So that type of stress isn't really there. I think what's going to happen is it's going to be more about what type of employment comes back. Does everything just all of a sudden, you flip the switch? I mean, obviously, everything's in place, but what's your thought? Are they just flip the switch, everything goes back to the way it was, or what do you see?
Yeah, so that's not my view at all. Again, I don't want to be like overly pessimistic, but I think it's more like you have to be realistic, and so that way people can sort of position accordingly. My view is that obviously we're going to reopen the economy here in the next couple of weeks, but it's like businesses aren't going to go back to normal. It's just not. Like you can even see like the BC health minister, for example, came out today and she's saying, well, we're going to limit groups of 50 basically for probably the next year. So like, for example, if you reopen restaurants, like you're going to reopen restaurants, you're going to say there's a max capacity of 50% of whatever it used to be. Restaurants are a low margin industry. So you're already, if you tell every restaurant that, hey, you can only cap out at this many people, the tables have to be so far apart. I mean, there's going to be so many of those businesses that aren't going to be able to succeed in that environment. So I just don't see the employment picture getting a whole lot better. Obviously, there's going to be lots of people that do get rehired, but there's going to be a huge chunk of people that don't get rehired, or if they get rehired, they're probably going to go to maybe a lower paying job. I mean, you have to look at it and say, pre-virus, we were kind of long into this economic expansion. Labor markets were tight, so wage growth was rampant, and that's obviously was a nice tailwind for housing. But now if you're going back, you're going to be thankful just to have a job. You're not going to be going to your boss and saying, oh, thanks for rehiring. By the way, can I get my 2 or 3% raise? So I just think that the labor market is going to be slow to sort of come back online. I think that's kind of a headwind for housing.
Okay, so then if we're talking about economics and supply and demand, in listening to what you're saying, I would suspect that supply could be great, but demand, if you're now talking about what's the ability of someone to actually afford and finance a purchase, do you see that maybe based on what you're saying now, like the economy is going to reopen, but everything's changing, supply could be great, but now demand could back the other way?
Yeah, so I think that the supply, I think it's going to be, coming back to normal because obviously people need to sell for various reasons. I think that you're also going to see like, investors, people that had Airbnb units, or maybe you had 3 condos and you're like, well, I just had a tenant leave and one of them, the other guy's not paying. Like maybe of the 3 condos that you have, maybe you want to sell one. So I just think the supply is going to be relatively what it was, maybe a little bit more, but I just think the demand is the critical factor. And I just think that, when you have an unemployment rate in the double digits, probably for the foreseeable future, it's going to take several years to repair a lot of those jobs. Like we basically, for example, for context, of all the jobs that were created since the 2008 financial crisis, we've lost all those jobs from a job growth perspective. So I just think it's going to take time. And so, for example, like this is obviously a market that was in Vancouver is heavily driven by like investors. As an investor, like there's so much like risk and uncertainty. Like how do you leverage up and invest in this market? If anything, I think they might try to like delever some of that risk.
Right. What about the thought that, everybody always says, well, Vancouver's special. Is immigration when you talk about investors, there's also the investor that's buying and actually coming here. Do you see that just based on the way this pandemic's happened and what the new normal be, that it's going to affect that type of person who maybe wasn't influential in making our market a lot busier than it probably could have been?
Yeah, so I mean, I don't know. My view personally is like I think the Canadian dollar is going to keep getting whacked. So I think that will make investment more attractive. So you might see a little bit more like foreign investment into real estate. But I also think at the same time is you're going to see like population growth is going to slow significantly. A lot of that has to do with like population growth is highly cyclical. So it's pro-cyclical with like the business cycle. So obviously when the economy is doing well and jobs are being created and, we need to import more immigration to fill these jobs, then obviously that's pretty rampant. And that's, again, support for housing market. But when you have a soft labor market, which I think we're going to have for at least for the next year or so, population growth is going to slow significantly. And so that's going to free up housing units. And at the same time, I think that we're obviously, because of that and everything that we're seeing, this is a very deflationary environment. So we're obviously going to see some impact on the rents as well. So as an investor, you're kind of looking at it and saying, well, the rental market's a little bit soft. What can I fill this for? I mean, maybe 3 or 4 months ago, you're getting $2,100 for your 1-bedroom condo. Tenant leaves because he can't pay his rent. What do you fill that for in this environment? Do you fill it for 2,000? Is it 1950? Maybe. And so I think that kind of needs to be reflected overall in the purchase price.
Well, I mean, there's so many variables that are unanswered right now. I mean, the courts are basically shut down. So even when this does get up and running, is it going to be that simple that, hey, you didn't pay your rent, so you're out next month? Or no, this is a long process. If somebody wants to drag it out, they can drag it out forever because the courts are going to be so backed up. And then there's the other thought that because of the way we've sort of gone now with this, the germs and the cleaning of the hands and not wanting to be with a lot of people, is the idea of that condo now and the high rise with the elevators and do you think that could possibly turn the other way now where people are like, you know what, I want to go back to dirt. I don't want to spend $2 million on a condo. I want to go buy a house.
Yeah. I mean, personally, that's not my view. I know people have kind of talked about that. That's not my view. I don't think I think people will still kind of buy what they can afford or what the banks will qualify them for. And so I still think like for the vast majority of people, like the reality is they can afford a condo and that's what they're going to do. I just don't, I'm, maybe more pessimistic on the prices in the short to medium term, but I still don't see a scenario where like the detached house drops enough in price for it to be quote unquote affordable for a lot of people. I just don't see that happening. So I still think people are going to be sort of funneled into what they can afford. And I think that's the condo market for a lot of people.
Right. And then what about, you talked about not really seeing the numbers yet. When might we come back to this and revisit and you say, okay, we've got the stats now, whether the economy, whether they've, Bonnie Henry said you're back to normal or whatever, at least you've got some numbers now and you're saying, hey, this is the effect.
Yeah, I don't know. I think probably to really come back and say, hey, prices are down this percentage, it's probably going to take at least, I think like 4 to 6 months at least to sort of say, because you're gonna have to get some price discovery, right? You're gonna have to see a couple condo units in one particular building sell. If they were selling pre-virus for $1,100 a square foot, now they're going for $1,000 a square foot or $1,025 a square foot. Like eventually, I think the market's going to start to figure that out and say, oh, okay, yeah. Then it's going to take some time for it to show up in the official metrics, which is the MLS benchmark. But just the way that metric is reported and the way that the stats are pulled in, it's kind of a lag. So yeah, I think to see like a real decline in prices as opposed to more an anecdotal, I think it's going to take probably 4 to 6 months.
And there's always that talk that don't try to time the market. But in ending the call here, if you're giving some advice to somebody who's either thinking of buying or selling, is it just if you're a buyer, if you can afford to buy, then it doesn't matter? Or what are your thoughts in timing?
Yeah, I don't ever really tell my clients like how to time it. I just say, listen, like I think time is on your side, so I don't think there's any necessary reason to go out there and like, oh my gosh, I need to make a decision this month or in 2 months because the market's going to go back up right away. I think it's going to be a bit of a time till we get some, a bottom and a recovery, and then eventually another up market. So I think if you can afford it, if you're confident in your job stability, then and you're looking for a primary residence to live in for the next 10 years, then I would say go for it. Hey, let's maybe try to negotiate a little bit better price for you. I think that's the way to approach it, not necessarily, hey, I'm going to wait 5 months to this day and then I'm going to make this lowball offer. It's like, no, like, listen, like right now moving forward, there's going to be some desperate sellers, more motivated sellers over the next couple months. If you can find one that's willing to play ball, and maybe you can grind them down a bit on the price, and you're happy with that price, you're comfortable with your mortgage payment and your job security, then yeah, I think you go for it.
It's all good. Okay, and lastly, what about your thoughts on Canada as a whole? I mean, when that U.S. thing hit, in 2007, 2008, we were slightly protected in our banking system, and we came out fairly unscathed. What's your thought now if you're looking at us, in combination with the world and the U.S.?
Yeah, I'm more optimistic, to be honest, in the U.S. than Canada. I think that coming into this, U.S. households are in a much better shape than Canadians in terms of the debt loads. So I think Canadian households are a little bit more vulnerable to this kind of downturn, and I think the recovery is going to be a little bit longer here, just because those debt loads, because of where house pricing was coming into this, and then obviously we can see the devastation in the oil market. That's a huge driver. So I mean, our Canadian economy realistically is housing and oil, and I think both of those are kind of in the crosshairs right now. So I think it's going to be a little bit slower of a recovery. That's kind of my view on Canada, but overall, I think I'm not worried about the banks. I mean, obviously, it's kind of a monopoly system here. Basically, there's a lot of support for the housing market through CMHC, OSFI, Bank of Canada. So I'm not worried about a U.S. style crisis, but I do think there's probably the probabilities to downside are significant. There probably will be some downside, but I don't think there's anything to be freaking out about.
Right. Okay, well, that's great information, Stephen. What I'll do is when I put the video out, I'll put your contact info. Obviously, great stats guy, but your main bread and butter is buying and selling real estate in Vancouver.
Yeah, appreciate it, Mark. Thanks for having me on. It's a good chat.
Yep. Thanks for joining me. Thanks, Steve.